Good evening, guys. It is Wednesday, April 30th, 2025. This Bathrobe business. I got my decaf coffee and I got the news. I was gone yesterday. I did not have a video. If you watch this channel regularly, you know I am in the midst of planning a wedding. I'm getting married at the end of May. I had wedding planning duties. And so there was no video yesterday, but I'm back today and there were some major headlines. So let's jump into the headline story of the day. And that is GDP. So, GDP numbers for first quarter came out, and the U.S. economy shrank by 0.3%. Now, this is doubly bad because there was expected to be growth of 0.4%, so we're in the wrong direction by 0.7%. Now, in addition to that, in addition to the shrinkage in the economy, there was also bad news on the front of inflation. So, inflation came out as 3.6% for the first quarter. This is personal consumer expenditure, so this is just raw spending, as opposed to 2.4 from the prior quarter. So we are seeing inflation kind of starting to tick up. We're seeing tariffs take effect, and at the same time, we're seeing a regress in the economy. Now, ADP also reported numbers. They reported only 62,000 in the month of April. That's down from an estimate of 120,000. I don't really care about ADP numbers anymore. I feel like less and less that company has become reliable in their numbers. For going on probably close to the second year in a row, their numbers are so farly skewed in opposite directions, or even if in the same direction, completely off from what the job numbers from the Department of Labor that come out on Friday. So it's not really worth mentioning, but I already did. So there you go. ADP reported poor job numbers. We'll see what the job report shows on Friday, though. That's really where the real analysis is. Now, despite all this, it seems like we're facing the worst case scenario. What's interesting to me is that the stock market doesn't seem to care. So this is the interesting part. So in the morning when the markets first opened, they were only down actually about 700 points. This was the worst case scenario. This is what everybody, myself included, was predicting, was that we were going to see the start of a recession. Technically, a recession is 2 consecutive quarters of negative GDP growth. We've already halfway to recession. And this, I think, will be in full recession based off of some of Trump's comments. Now, the interesting thing is the market doesn't seem to care anymore. This could be that the market is kind of getting adapted to the volatility, or it could be that it knows something that we don't. There are some positive trends in the economy. I've talked about them on this channel, and maybe that's what's being reflected here now. But I found it very interesting that the market doesn't seem to be reacting pretty negatively to what was the worst case scenario just a couple weeks ago, the beginnings of a recession. So, and the market actually, closed up positive 233 points. Now, partly that was because of earnings, but even so, we've had a lot of companies have positive earnings recently, and even that hasn't been enough to move the market. But for some reason, this scenario did not yield a negative result in the Dow Jones or the NASDAQ. So now to piggyback off of that, Trump came out and blamed Biden for the problems with the economy. He's saying that I blame him for Q1 and for Q2. Now, what's interesting is Q2 has just started. So I think the Trump administration is already predicting the fact that we're going to have negative GDP growth in the second quarter as well, because this seems very predictive. He obviously has the ability to have data that we don't, not to mention just the foresight of what he's going to be doing and what deals are coming down the pipeline. So essentially, he played his hand saying that, yes, we will have second quarter GDP negative growth. So in other words, yes, recession is happening in 2024. And again, the market doesn't seem to care. Now, let's jump into what could have bolstered the market today. So first thing was Microsoft had fantastic earnings. Meta had fantastic earnings. Microsoft came in with earnings per share of $3.46 versus an anticipated $3.22. Revenue was at $70.07 billion versus an anticipated 68.42. Now, this was across multiple of their platforms. AI is still a drag on their earnings, but they're doing heavy investment into AI, including, let's see, I had the number here a second ago. So they increased their AI spending but their total AI spending was 16.75 billion, up nearly 53% from previous quarter. So they're constantly engaging in higher and higher engagement with AI. That's yet to yield profit, but overall their fundamentals are great. Meta also had similarly very strong numbers. Now their guidance is a little bit more tweaked. Meta reported great earnings per share of $6.43 per share versus an expected 5.28, and revenue of 4.231 billion versus 41.4. Now, the interesting thing with this, Meta has predicted, not even a prediction, is flat out saying that they are seeing reduced ad spend coming out of China. This is primarily due to the de minimis tariffs that I talked about just on Monday. So a lot of ad revenue for Facebook in China comes from companies like Shein and Temu. They advertise heavily on Facebook. People go to the site, purchase the products. With the de minimis tariffs coming in and everything going to be jacked up somewhere from double to maybe triple the cost of what it's traditionally been on those websites, they are reducing their ad spend. So we are once again, definitely in full trade war. Not a surprise to anyone. But what's interesting is despite that, they're still seeing positive growth in the second quarter. So despite the fact that they're seeing reduced ad spend, their guidance is still coming in at market expectations. So the market is pretty happy with that. Again, one of those things that's showing maybe there's more strength to this economy that would appear. Lastly, I'll report. Well, I'll have two last stories for you. The first is the White House is moving fast as a possible new trade deal with India is worked out. So why this is interesting is Trump and Modi have always been very close, and that connection seems to be growing closer and closer. But this doesn't come as a surprise. We've also seen that Apple has made commitments to move into India. That's kind of a red herring simply because they're still at a Foxconn facility, which is a Chinese company, so it doesn't really matter. But we're seeing more and more industry being moved into China. Out of China into India and into Vietnam, Malaysia, a lot of countries in the South Pacific. So why this is interesting is because it kind of does fly in the face of we're going to reshore a bunch of industry. It seems like the Trump administration is focusing hard on moving industry out of China, but not necessarily moving it back here into the United States. I talked about it on this channel before. I don't think that there's going to be real reshoring of jobs. Reindustrialization is incredibly complicated, and usually it's easier to reindustrialize a new sector than it is to reindustrialize an old sector. It's much more expensive, much more complicated, and very slow to progress. So with these tariffs, you might see new technology coming to the United States with new industry, but old existing industry is not coming back. All of these garment industries, basic manufacturing, they're still staying abroad. We're just shifting it from China into other countries. This is really geopolitics and not really economics. Last story I'm going to talk about is just housing. This is more of a blurb than a full story. It's just starter homes in the United States are at least 1 million in over 200 cities. This is actually up from where it was just 5 years ago. Remember, 5 years ago was the start of COVID. So this is nearly triple the cost of where it was 5 years ago. So if 200 cities or 200 cities in the United States now have over 1 million, last time we were facing closer to about 75, 80, 90. 90 cities in the United States where the starter home was closer to around 1 million. So it's incredibly sad. This is inflation at work. We'll see what tariffs do with this inflation as well, because tariffs do affect housing costs, especially with new construction. But it's unfortunate that starter homes are now all above $1 million. That's pretty much it. Those are the stories of the day. Hope you guys have a productive Thursday, and I'll see you guys back here tomorrow. Bye.